guys, the ES. Here's your monthly chart. Remember, we get a new monthly candle starting tomorrow morning. We're in May now, and we are flirting with the first possible lower high followed by a lower low on the monthly time frame since 2015. If you look at these charts, never have we gotten a lower high followed by a lower low since way back right here. Now, one thing that, if you're just looking at this chart, one of the things that stands out is that if you go and look at other bear markets, like here's your 2000 .com bubble, and here is your the great financial crisis. This price action seems a lot more volatile, right? Really wide monthly candles, nonstop. But I want to remind people that when you get into these big numbers like this, these things happen down at the 1600, 1500 price range. We're up at the 4600s. If you look at it in a log chart, this kind of like adjust things for the price levels to show you a better, almost a more representative visual of like the size of the move we've seen. So when you do it this way, you can see like, even though it may feel like we've been in this bear market for a while, or we're way off the highs. Dude, we're down like 13% or some shit, right, from the highs. Let's go look. 15, 14%, somewhere in there. If you look at past ones, this was down like 57%. This was down like 50%, I think. Let's check. 51%, right? So like, I know it seems like this is pretty ugly, but it can get a lot uglier, okay? And it doesn't mean it will, but I just want to keep people's expectations kind of in check or in line. Now, I do kind of think that we possibly break these February lows and do get the confirmation that we have a lower low after a lower high, right? Which that's how things can trend down. Until we do that, right? If you guys remember, on the weekly time frame, we had triggered the long, and so that long trigger that we were talking about, which was the break right here in mid-March, that is not invalidated until we lose these lows, right? Because how's the thesis work? The thesis works like a stock, if it is going to go higher, needs to stop making lower highs and lower lows. The only way to do that is to make a higher low and then a higher high. We did that. Now, we don't know where the next low is going to be. Is it going to be a higher low, or is it going to be a lower low? So until we come back under February's lows, this is still technically intact. Now, granted, it's pretty damn ugly, right? It's just been red week after the big bear market rally up into those levels. But just as black and white as we can keep it, as objective as we can keep it, this is still intact until we lose February's lows. I think we do lose them, but I also have to keep things objective in terms of how I can trade. We're getting to the point where even if we do lose those lows, we're getting a bit oversold just on the near term chart. Like if we look into a daily here, you'll see it's just been down. A few little rallies, but they got smoked pretty quickly. And even if we lose these lows, I really do think that we attempt to go higher first before rolling over significantly more. And remember, that's normal. We absolutely need to try to go higher first in order to substantially go lower. So, if we were to just keep falling off a map, eventually we're going to get a big face ripper, and that's not going to be, as easy to trade as if this is to stay a little more controlled and we get that attempt to go higher, we see the bulls fail, and then the bears step back in. So you can see the levels I have marked. I do want to point one thing out, and this applies to both the NASDAQ and the S&P, and that is last Monday, which is this green candle right here, I was actually traveling home that day, right? So I wasn't in the market that day, but I had gotten home that night, and the next morning, I'm trading at my desk for the first time in like over a week. So I'm checking out the market, and I look at the daily candle on the ES and the NQ, and I'll show you the NQ too real quick so you can see it. It was this one, right? This candle. Both of them were pretty bullish candles after a decent sell-off. Those are pretty bullish reversal candles on the daily chart, And I came into the market saying, you know, I think the plan for today is look for flushes to support to get long on some certain equities or whatever. And dude, they just got all the bulls got destroyed this day. They just could not bounce. And then you get 2 days of attempted to rally and then new lows again. So like I really do feel like this is showing that the bears are starting to get a bit more confident and the rallies aren't really worrying them at all. I do think we come under February's lows and then maybe try to push back up. You'll see the resistance I have marked, 42.25 we'll call it, is going to put us into an area where I'm looking for resistance. And above that we have last week's highs, this kind of area up in the 4,300 area. If we get through that, you got the 50-day and the 20-day in this range, which puts you into levels that are significant, even if there was no moving averages there, right? And that's one of those things I hope you guys understand is this confluence of, you know, if it's just a 20-day there, but there's no daily levels, there's no reason why that moving average really should matter. It's a little less amount of weight I'm about to are able to put into that level because it's just a moving average, right? But if there's levels like these daily levels, you see we're just kept hitting our heads up on that, right after we had shown support there. Come under, resistance, get above it, show support. Now we're below it and we're going to push right into it. Now the 50-day and the 20-day are both right there. That level is going to have a lot of significance for me, all right? And then above that, you got your quarterly pivot, which will change tomorrow, guys, right? Let's see. Oh, no. The new quarterly started in April. I'm sorry. But you have the 200-day and the weekly 20 is up there as well. We'll call it 44.70. Support, all we have is the rut row level, which is February's lows. Below that, you have your annual pivot and that round psychological level of 4K. Okay. So NQ is going to be very similar, except the fact that